Hey listeners, it's Paul Andriola here. Why not join our community at Small Cap Discoveries, where we offer our members direct access to some of the best microcap investment opportunities available. Our members are getting access to premium microcap financings, research reports, and direct access to management. Sign up today at www.smallcapdiscoveries.com.
Hi, everyone. Welcome to the Small Cap Discoveries conference call. Today on our call, we have CEO Maury Marks of Quorum Information Technologies. Quorum trades on the TSX Venture Exchange under the symbol QIS and on the OTC under QIF-TF. The company is trading at $1.13 with roughly 73 million shares outstanding, or about an $82 million market cap. I'd now like to hand it over to Paul Andriola.
Thanks a lot, Trevor. Yeah, great to have Maury Marks back, CEO of Quorum Information Tech. We had you on about 7 months ago. You just put out your Q2 results, some good solid revenue growth. So happy to have you on. Maury, why don't you tell us all about Quorum, get us back up to speed with what you guys do.
You bet. Thanks, Paul. Thanks for having me again. I'm going to jump into a quick little presentation to give everybody an update on where we are at. So let me just jump through our forward-looking disclaimer, and I'll start here. I am going to get to our numbers and talk about our Q2, as Paul alluded to. But before I get there, I just want to talk about the value prop that we're providing through to car dealerships. So we provide our software through to typically franchise dealerships, the GM stores, Toyota stores, Ford stores of the world out there. There are three things that are sort of drivers to why we have a lot of demand related to our software. And so let me just walk through those. And in doing that, I'll tell just a little bit more about our story and some background around it. So the first one is this seamless, frictionless workflow. What we have actually got for dealerships, for franchise dealerships, is we've got a dealership management system, so an ERP for a car dealership, if you will. And then we've got a number of different products around that ERP. And that is our product suite. And so that collection of products, we have 11 different categories of products for dealerships that really help them with their sales, business process, service processes, parts processes, accounting processes. So we're really focused on seamless workflows. And why we've went down this particular strategic path is when we look at dealerships, at franchise stores, and what they're doing out there, we find the dealerships are typically buying between 20 and 25 different products to run their dealership. And these are disparate products that have maybe loose integration. And so they're trying to get all these pieces to work. Well, we bring a product suite model to the dealership, and we have 11 of the top 20 or 25 different categories of solutions. And we just smooth out the business processes for dealership, make them a lot more efficient and a lot more effective. And then we put enterprise reporting on top of that. Now, so that is one of our key value equations. It's taken us a fair number of years to build up our product suite. We've built it through innovation, where we've built different products. We've built it through acquisition. We did 3 acquisitions over a 4-year time frame. So the combination of the innovation and the acquisitions is where we've gotten to, or how we've gotten to our product suite that we have today. What we also do for dealerships is we improve their profitability. And this is a big focus right now. Obviously, dealerships have gone through a tough time during COVID times, like many businesses, like many of us have gone through, and they've had up and down demand when it comes to selling vehicles. They've got a lot of challenges in front of them, but one of the areas for them that is quite consistent is that service and parts business. That is the highest margin business for them. And we've got some great solutions for them that not only help them optimize that part of their business, but will help them drive more revenue into their stores. And we call that philosophy, make more money. If you were to talk to our dealerships, they would completely understand what you meant by make more money, because Quorum is very focused across our entire product suite on driving more revenue into the dealership. One of the brands that we acquired through those acquisitions was a brand called DealerMine. And it is very focused on helping dealerships drive customers back into the service department and really doing a great job of looking after those customers through the service visit. And then a third element to our efforts to help dealerships out and really help drive demand for our products is our consumer direct strategy. COVID has accelerated the consumer direct strategy for all different dealerships out there. And so what I mean by that is consumers now want to buy a car online. They want to have a touchless, transparent service experience. We have products for them to help them with that. So we have our My Deal product, which is from one of our acquisitions of a company called Autovance. And that particular product helps a consumer buy a vehicle online, and is being adopted actually in 2021. We've seen great adoption of that particular product. Our Power Lane product on the service side, helping dealerships in the service lane, allows a consumer to come into the dealership, or not even have to come into the dealership, to be able to online check in their vehicle, have the dealership do their walkarounds, do the inspections of the car, receive videos, look at what additional repairs might need to be completed on their vehicle, and then authorize those repairs electronically and pay electronically, and never have to go into the dealership. And once again, that's a product that for us has had fairly high adoption in 2021. And those are both two new innovative products that we built out. That combination, right, of those three elements is really what's driving the demand. Dealers are finding that they need to modernize, they need to step forward, and we've got the product suite and the products to help them through that. Jumping ahead and into key metrics. So this is just a number of key metrics related to our Q2 2021 and some other metrics sprinkled in. I'll talk to those other metrics as I go through here. So you can see revenue for us was $9.1 million in the quarter. SaaS revenue and BDC revenue were $6.4 and $2.4 million. Those represented 5% and 9% increases over Q1. So if we look at quarter over quarter increase annualized, that's a 20% increase in SaaS revenue and a 36% increase in BDC revenue. For us, that was a fantastic quarter. It was great to see us hitting double digits or double digits plus into the 20% mark with our SaaS revenues. We were very happy with that. And it's really, that revenue growth is driven from the previous slide where I talked about how we're helping dealerships modernize their business. Gross margins for us were consistent with Q1 of 2021, with the exception of BDC revenue, or BDC gross margins grew by 3 points to 13%. We have been working on optimizing our BDC and trying to move the margins up, keeping in mind with our BDC revenue, there is a very tight link to SaaS revenue and our BDC revenue. Hence, you can't hire our BDC without buying our software. And so those two are fairly linked for a piece of our business. Adjusted EBITDA, cash income were fairly consistent with Q1. They were down just a little bit off of Q1. But for us, that was because we were making investments to really focus on growth as an organization. And then in the bottom left-hand corner, I just want to point out a real critical element for us. With this product suite, we have the ability to sell to a dealership product that would amount to $7,000 of revenue per dealership per month. We call that MARPU, monthly revenue, recurring revenue per unit. So we can sell $7,000 in our product suite. If a dealership goes with our entire product suite. There are some cases out there where we can't sell our full product suite to our entire customer base of over 1,000 customers. So what we look at is our MARPU TAM is about $5,000. Right now, our average MARPU based on our results is a little over $2,000. You can see $2,091. So that means we have an additional $2,909 of available MARPU. For us then, cross-selling, there's a monster cross-selling opportunity for us as an organization. And last time I was here, Paul, our our existing SaaS MARPU was at $1,950. So we've moved the needle quite a bit up to $2,091. And then one more number that I'll point out on here is just our annual recurring revenue run rates, our SaaS run rate at 25.7 and our BDC revenue run rate at 9.5 million. Those two revenue streams make up 97% of our total revenue. And so we're a company where 97% of our total revenue is recurring revenue. Jumping us forward, something that I talked about a fair bit last time I was able to join everybody here was our growth opportunities. I'm going to do a real quick high level on our growth opportunities just to remind people of what they are. So the cross-selling opportunity I already talked about. That one for us is one of the most exciting ones because we already have a relationship with those particular dealerships. And so it is an easier sell if you have a relationship and you're doing a good job for a customer to sell them more product. And we pride ourselves on doing a good job for customers out there. Another area for us that is a growth rate is product innovation. As we innovate and add more products to our product suite, we can grow our overall available MARPU TAM. And then in the Canadian marketplace, you can see on the left-hand side that one Quorum product is in 28% of the franchise dealerships in Canada. So that's actually at least one Quorum product is in 28% of the franchise dealerships in Canada. We have great brand recognition in the Canadian marketplace, and we continue to grow in Canada. It's home to us, and we're excited to sort of continue to grow in the Canadian marketplace. The US market, as you can see in the bottom left-hand corner, is where we have a significant growth opportunity. It is, as people know, a difficult market to grow into because it's so large. And so you've got to be very thoughtful about how you make your investments in the US marketplace. But as you can see, we've got lots of growth opportunity in the US. Interesting enough, all of our product suite is sold in the US at the same price as we sell in Canada, but in US dollars. And hence we've got usually another 25% more gross margin reasons to actually want to expand in the US. And then the last growth opportunity for us is just expanding our product offering, whether that be partnering with different organizations out there or acquiring companies like we've done in the past. And then the last slide that I'll share with everybody just from an update point of view is it has to do with product innovation. We've got some really exciting product innovation going on that will largely impact us, we believe, in 2022. Maybe some of it will impact us in Q4 2022 or 2021. But let me just quickly whip through these. On the left-hand side, MyDeal. I mentioned MyDeal is our digital retailing tool. Today, Quorum sells that to existing customers or new prospects out there, but our sales channel is through Quorum. We're excited that we've been able to announce a reseller partnership with eDealer. That was announced back in Q2 of 2021. That's the first reseller partnership that Quorum has ever completed. eDealer is the largest Canadian provider of franchise dealership websites. And so we've basically been able to align with a company that has a stellar reputation in the marketplace, and they're looking at bundling their website offering with our MyDeal offering. We should, like it says on this slide, start to see sales from that in Q4 2021. We might see this first sales then, and then we'll see ongoing sales in 2022. PowerLane for us, which is our service lane offering that allows that touchless, transparent service experience that I was talking about before. That product is a little more of a heavy lift to get it installed within a dealership. But once installed, it does incredible things for stores. So as you can see on screen here, we're seeing a 25% increase in hours per work order. Right, so that'd be technician hours per work order, which equates to $50 to $100 or more per work order in increases. Now, the dealership really needs to embrace the power lane process, but once they do, there's a big reward to that. Why that's exciting to us is it allows us to drive more ROI into the dealership, help them make more money, and which also then impacts our pricing and our ability to price that product. And so we're sort of excited going into 2022 because we think we can actually increase the price of the product because it's doing so well for stores. Going into the middle of this particular slide, we have Q Cloud. We are now deploying our accelerator DMS, that our dealership management system, the core of our wheel that I was showing before, on the Microsoft Azure cloud platform. So we've been working in partnership with Microsoft to get this ready to go. In the past, we've deployed Accelerator on a on-premise server, or we had a different cloud offering, but now we've upgraded to the Microsoft Azure cloud. What's exciting from an investor's point of view is that's going to turn one-time or services revenue for Quorum into SaaS revenue. And as we move our customers over to Microsoft Azure, we're going to be able to move our 10,000 plus users of Accelerator from a one-time revenue stream into, in that particular case, into a SaaS revenue stream, which should be very helpful from a financial point of view, not only from a revenue growth point of view, but also from a gross margin point of view, and it'll help us grow our gross margins. And then also in partnership with Microsoft, we've worked with them on Azure Synapse, and that was a project to consolidate our data across all of our product suite, across all of our dealerships. So over our 1,025 dealerships into the Microsoft Azure Synapse data lake. That gives us many future opportunities from a revenue point of view, gives us the opportunity to commercialize how we could use that data, whether we use it for creating insights into the data, into benchmarks for dealerships and helping them make better data-driven decisions. It gives us opportunity to build machine learning applications off of that particular data to help the dealerships out. And one that's exciting for us in the shorter term in 2022 is it'll allow us to access a new pricing level with Microsoft for a product they sell called Power BI that we use for Q Analytics. Today, when we sell Q Analytics, which is our enterprise reporting tool, to dealerships, we sell it only to the management team because of the price point of it. But if we can reduce that price point, we can sell it across the entire dealership for all staff. And then finally, on the far right-hand side, when it comes to mobile sales CRM, we've made some upgrades to the mobile sales CRM application that DealerMine has. What's exciting about this is the DealerMine sales CRM product is in about 50 of the 480 DealerMine customers out there. With this new mobile application, we believe we can get a much higher penetration rate across the DealerMine customer base that is out there. And we also will have the ability to be able to have the integrated Autovance suite come through with those sales. So we'll be cross-selling Autovance with the new DealerMine sales CRM application through to the DealerMine customer base. And then over time, we'll be able to cross-sell it across our complete customer base. And that was what I wanted to share with everybody, Paul. So I know that was a whirlwind through a bunch of different slides. As a reminder, these slides are on our website at quoruminfotech.com. So if people want to take a look at them and go through them in a little bit more detail, please, by all means, go take a look. And there are additional slides in this deck too that people might find of interest. So Paul, I think I'll turn it back over to you.
Perfect. Thank you, Maury. You make my job a lot easier when you do such a thorough job. So I appreciate it. Why don't we talk a little bit about, I mean, the slide you got up right now, these are new products, they're rolling out. Maybe, the My Deal and Power Lane, we spoke to that last time you were on, but give us a sense of where you are in sort of the rollout and maybe sort of the current customer adoption. Just give us a sense where you're at.
Yeah, sure. So My Deal is adopted by approximately 60 different stores today. approximately 30, I'm gonna round my numbers off, but approximately 30 of those are also accelerator customers. And so we continue to sell MyDeal through to accelerator customers and Autovance customers. We will, with the mobile DealerMine sales CRM initiative, start selling to DealerMine customers as well. And then, of course, the e-dealer will start to sell to their franchise stores in addition to that. And then,
go ahead, sorry.
Oh, I was just going to go ahead, Paul, and then I'll talk to PowerLane.
Okay, no, I was basically going to say, like, on a percentage basis, what do you think the adoption rate is of your existing clients?
Yeah,
and then I was going to go into pricing, but I'll let you answer.
Yeah, so we're realistically only at of who we can sell MyDeal to today. We're realistically at a little less than 10%. So we've got lots of available market for MyDeal. In addition to that, we're also selling it as part of the accelerator full complete product suite, or as part of the Autovance product, Autovance suite to new customers. So we're also bringing in new customers as well. Keeping in mind, Paul, that when we go to market as 3 different brands. So a dealership can start with us on the full product suite, accelerator in the full product suite, or they can sign up with us under DealerMine, the DealerMine brand, or under the Autovance brand. In both of DealerMine and Autovance's cases, you can be on a different competing DMS platform to accelerator and still take advantage of the DealerMine and Autovance products.
And then PowerLane.
Okay, and so PowerLane is in just over 50 stores. PowerLane currently is only being sold to accelerator customers. So in that particular case, we are at, what would that be? About 15% adoption or so. And yeah, and once again, lots of room to grow. And I just think as we can publish more and more of the exciting results that we're starting to see, that'll help with our growth momentum on PowerLane.
That's basically what I wanted to hear, is exactly that. You guys, you still have a lot of room to move and sort of capture your existing client base with the product. It just gives us a sense of pricing. Like when somebody has one of your products already, what are they looking at in terms of additional outlay of capital, of cash?
Yeah, so this is always an interesting one for us, because you're going to find we have price opportunities here as I talk through this, right? So let me start at the product suite level, and then I'll come back and talk about MyDeal and PowerLane. So if you start at the product suite level, our accelerator DMS, when we compare it up against CDK or Reynolds, we're typically 40% less than those competing products. Now, when you actually extrapolate out and you look at our whole product suite and put that into a store and you compare it against the CDKs or the Reynolds, plus all of the disparate products that a dealership would have to buy, we're usually at least a 50% savings on the environment where you'd buy all these individual disparate products. So it's a compelling value equation that we bring through to a table, to a dealership, sorry, from a pricing point of view. What we're finding is that on a lot of our products, like the MyDeals and the PowerLanes, the innovative ones that we've added over time, we're usually about 50% of the price of competing products out there. So for us as an organization, what we keep looking at, obviously, is our pricing strategy, but we keep looking at, taking out accelerator being the hub of the wheel that I was showing before. The wheel around in our product suite really drives a lot of value, and we're priced at a very competitive price point. And so for us as an organization, there's room for us, especially as we can prove out our ROI more, to actually move our pricing up on our product suite.
What part of the business would an investor, or should an investor keep a real close eye on that's going to generate the biggest sort of growth momentum? Is it a product? Is it your pricing power? Is it a geographical area? Where should we be watching to see that you guys are either accelerating growth or just keeping the same momentum?
Yeah, so I think it's a couple of things. I think adding rooftops for us is always an important piece. We don't believe that we'll be able to outpace our cross-selling growth with adding rooftops, but we're going to try. So the adding rooftops is one. Another one, and I'm just going to back up as we sort of talk through this. I'll just back up a slide or two here. I would say our MARPU is another one. I mentioned before that we're at 2091 MARPU today based on Q2 numbers, but last time I was with you presenting, we were at 1950. So MARPU growth is an important one for us. And then the third one would be that just how we're doing on our new products that we're bringing to market. And sort of the questions that you've asked around MyDeal and around PowerLane, and especially how are some of those innovative consumer direct products doing in the market.
I mean, let's talk a bit about that, because obviously COVID has probably changed the way a lot of businesses have operated, and if anything, it's sped up the adoption of more, so call it online or direct to consumer. How are you guys dealing with that, and how do you envision sort of the industry you're in? What's it going to look like in a couple of years? Yeah.
So once again, I'm going to just put a slide in the background as I talk through this. Our vision on this is where we're making our investments and where we have really great products is in the consumer direct area. So we believe what we need to deliver to dealerships is a hybrid model today. So it's a model where we have a great business process. We have these frictionless, seamless workflows in dealership, but then we also have these consumer direct products that allow people in COVID times and beyond to be able to transact with the dealership the way they want to transact digitally with the dealership. And we believe that what we need to do is make sure that if I'm a consumer and I'm saying wanting to buy a car online, if I start the transaction online through MyDeal, if I need to go talk to the dealership or go into the dealership or do a test drive or get my trade-in valued, well, they better not start me all over on a new business process, a new sales process. They better just continue on, know exactly where I am in the sales process and continue on with that process. And then they'll let me go back online and complete the process. What we've been very careful about when we're building out our consumer direct pieces is we accommodate that. We accommodate consumers to come into the dealership online, go into the dealership, or just contact the dealership, go back online, or start in dealership, go online, do whatever they need to do. Whatever that customer journey is, we're allowing for that by making sure that the online business process and the in-dealership business process are well aligned. Our belief is that for the next X number of years, that is a model that is really needed within dealerships, and that's based on not only our perspective but talking to many of our customers. We spend a lot of time with our customers and really try to understand the challenges that they're facing, and make sure that we're working with them. We have a lot of different steering committees across the organization with dealerships involved, and we listen. The voice of the customer is well heard within Quorum.
You mentioned challenges that your customers are facing, but what challenges are you facing? What sort of keeps you up at night, if anything, about the business right now?
Staffing, because we're in growth mode, and so finding people is one of the biggest challenges, and that has changed with COVID as well, especially in the technology business, right? In the technology business for Quorum, we've operated in a lot of these smaller metro centers, and so it has allowed us to build development teams and support teams and delivery teams in those smaller centers. But now, with the way businesses operate in COVID times, anybody can work from anywhere. And so, we just have to ensure that we are always looking after our staff and keeping the people we have happy, and being very competitive and when it comes to finding staff as well to help support our growth.
Yeah, that seems to be a challenge. I'm hearing a lot from the CEOs we've been talking to. Maybe a little bit about the industry right now. Maybe you can answer this as a bit of an industry expert, but we're hearing about shortages, material shortages, and everything from it's hard to get a used car and stuff like that. How does that impact your business, if at all? And if anything, I would almost think it would drive more efficiencies for your customers.
Yes, and absolutely. I mean, the chip shortages are fairly well documented out there, which are impacting new vehicles, and the impact of that is because there's a shortage of new vehicles, there's a higher demand for used vehicles. So then there's a shortage of used vehicles, as you described. What we're able to do from a positioning of our particular products is, first and foremost, is we really are highlighting the products that are helping the fixed operations, the service and parts business, because that is the steady part of a dealership's business, that is the high gross margin part that can just keep everything moving along month after month after month. When it then comes to the sales side, we have different products within our suite that help a dealership not only drive more leads in for vehicles, so that isn't as in demand when you don't have the inventory, but we have other parts of our product suite that help a dealership get a higher gross margin per vehicle sale. So that's where you get into not only the efficiencies of the process, but also the salesmanship of the process. If we can help a dealership present options in a better light, and get higher sales penetration rates across different services that the dealership would sell, like F&I products and services, then we can still help a dealership out despite the fact that they're struggling with inventory.
Now, you mentioned you made an acquisition a little while ago. Are you guys still sort of looking at other M&A opportunities? How does an investor sort of think that through?
Yeah, we absolutely are. And the way we look at this, there's two areas we look at. One is, can we make an acquisition that would add to the product suite? So at the onset, I talked about there's 20 to 25 different categories of products that dealerships buy, and we're in 11 of the most common ones, but can we add the 12th and the 13th and the 14th? So that's one way we look at it. The other way we look at things is, are there acquisitions that would strategically help us with our consumer direct strategy? So could we buy something that would really plug into our MyDeal digital retailing solution and help dealerships, especially when it comes to digital retailing or the power lane side of things. So yes, we continue to look for opportunities.
I didn't mention to those that are listening, if you have a question you want me to ask Maury, please feel free to use the chat function. I'll do my best to ask the question. We touched on this earlier. I always try to sort of take it from an investor's viewpoint, but what should we be watching? What metrics or even what catalysts should we be watching for to just understand that you guys are executing on the business plan you guys are rolling out?
Yeah, Paul, I think I'd go back to the three that we talked about before, right? Rooftop growth, MARPU expansion, and the third one being adoption of our newer products, especially our consumer direct products. If there were a couple of other metrics that we're very aware of, I mean, we are gross margins are always important to us. If we can get any kind of gross margin expansion, we're interested in being able to get gross margin expansion always. and then the other one would be our EBITDA margins as well. And it's not that we're looking right now to expand our EBITDA margins. We would if we found ways, but we're looking to keep our EBITDA margins consistent with our EBITDA margin consistent as we sort of grow our top line.
Now, I think I remember on the slide, you've got about 28% market penetration in Canada and I think it was 6% or even less. I can't remember in the U.S. How do you? There we go, 0.6%. So
0.6.
Yeah, exactly. So I mean, huge opportunity in the U.S. How do you tackle the U.S. market if you're going to grow there?
Yeah. So I'm always looking at the U.S. marketplace. And I look at all our brands, and I'm looking at product readiness. Are we ready with that particular product or product suite to really go after the U.S. marketplace? Is the value equation that we're presenting as strong as what we present in the Canadian marketplace? Are there going to be implementation bumps, so on and so forth? And we're always looking at that. And then the second thing we're looking at is, are we ready from a marketing engine point of view to drive in qualified leads? And then we'll make the sales investments that we need to make when we check the boxes on those first two items. Mm-hmm. If you look across our different brands in the U.S. marketplace, we in 2020, late 2020 and early 2021, we did a fair bit of work to grow our accelerator platform in the U.S. marketplace and Autovance. What we learned from that is we learned there are some product changes that we need to make if we want to really grow adoption at a higher level and grow it in a very smooth fashion. So we're going back and making those particular investments right now. What we also learned from that is DealerMind. Our DealerMind brand is a brand that's ready to grow in the U.S. marketplace. And so we are just now starting with the marketing, the digital marketing campaigns to drive qualified leads into the top of the funnel and getting ready to invest more on the sales engine side of things. So that would be sort of the nearer term strategy for us. The longer term, more of a mid 2022 strategy will be to make those same investments around Accelerator and Autovance.
Fantastic. Okay, so I'm going to sort of summarize a little bit here. You've got a business that's growing, top line is growing quite nicely. You've got room to improve organic growth by increasing your number of rooftops. You've got products that you're, innovating and launching to existing customers, and you get customers. You continue to grow your customer base. So a lot of opportunities to grow here. And 90% recurring revenue, which I don't think I've seen too many companies that can say that. Why don't we sort of wrap up with giving you the opportunity to just either summarize or give a key takeaway, a key message that you want everybody to leave with today? Yeah,
sure. No, thanks, Paul. So just for clarity, I don't know if you said 90% recurring revenue or 97. We're at
97.
97% recurring revenue, which I think is an important piece of my key takeaway, right? Is not only are we a strong growth company. I mean, last time I was on the show, I talked about us wanting to get to 20% revenue growth, and here we are in Q2 getting there. And as you can see, we've got lots of growth opportunities, but there's also a security level related to Quorum as well, if you will, right? Where we have low churn as an organization. We've got 97% reoccurring revenue. We're dealing with large franchise dealer groups. Auto Canada, for instance, is one of our customers, which is the largest publicly traded dealer group in the Canadian marketplace. We've got 7 of the top 10 dealer groups. So I think we're a really interesting story in that we've got this great growth opportunity and are executing on that. But we've got a lot of attributes about us that you would see in maybe a larger company than what we are today. That should give investors some security over making an investment in Quorum.
Fantastic. Now, you mentioned the presentation we saw today in totalities on your website. What's your website address?
QuorumInfotech.com.
QuorumInfotech.com. Perfect. We've been speaking with CEO Maury Marks, Quorum Information Technology, symbol QIS on the Venture Exchange. Maury, it's great to catch up with you again. Great to have you on today, and we certainly look forward to staying in touch and catching up in the future.
Well, thank you, Paul. Look forward to future conversations.
Thanks so much.
You bet.